Hello traders, and welcome to a new day trading strategy video of mine. In today's video, we're going to be picking up where we left off with supply and demand runs. And the goal of today's video is to improve one's price predicting ability in the short term by looking at the order book with supply and demand runs, to getting one's order filled at the best price, and finally for scalping. So all three of these can pertain to different kinds of trading strategies. If you are a short-term trader, then this could be helpful with scalping. If you're any other kind of trader, getting one's order filled at the best price is a goal that many traders have who want to make the most amount of money and lose the least amount of money. You're going to want to get your order filled at the best possible price. And knowing supply and demand runs is going to help with that ability. And also, of course, price predictions that I had mentioned as the first part. All right, so let's get right into what we're looking at for today's video. So this is the GDAX order book and the GDAX trade history. Just for reference, this is the Bitfinex order book and the Bitfinex order history. When I say offers, that's going to be the same thing as asks. So as you can see here, these are offers, these are bids. These are also known as asks, as you can see here, but I prefer the synonym that within trading that we call this offers because it's easier to say than asks. So when I say bidding pressure, what I mean is a good, strong bid, many bids and not many offers. When I say offering pressure, what that means is many offers, many limit sell orders, and not many limit buy orders, not many bids. Limit buy orders, limit sell orders, just for a quick recap on those who do not know that. Okay, so let's get started with what we're looking at with bidding pressure and offering pressure. Strong bidding pressure is going to have three factors. It's going to have a large moving bid wall. So that's going to look like this, where as price goes upward, the bid wall moves directly at the most current price, and it continues to do so. We have very few offers relative to the bid, so very few offers here, as you can see. And finally, we have a concentration of bids at the top of the order book. So we're going to see many more bids at the very, very top of the order book, so the price that will be executed on immediately for a market order, or the second possible price. Beyond that, these are less likely to be hit in the short term. So we do have to be careful when looking at the strength of an order book, because a mistake that a lot of beginning scalpers or beginning traders make is they think that many bids just means the price will go up, and many offers just means the price will go down. It's a little bit more complex than that, and it really matters which way the order book is weighted. For example, if you see many bids at the top of the order book, that means price will likely go up. But if you see if you see offers that are evenly distributed, but then you see many bids that are at lower prices and just no bids here, price will likely just sell down to a point where there are many bids. So really, a strong order book would not look like that. It would have many bids at the top of the order book, as you can see here. Okay, so offering pressure, strong offering pressure, just going to be the opposite. So this is where we're going to have that large moving offer wall like that. As price goes down, the offer wall goes down. Very few bids relative to that offer wall, 29, and really just not many bids here. Price will likely just cut through these prices, and it did. And a concentration of offers at the bottom of the order book, just like with bids. We see that somewhat here. We see a good amount of offers near the bottom of the order book, and really not too many at the top besides the 8.5 that we have up here. So this will be a relatively strong offering side of the order book, which would likely lead to a supply run. This would likely lead to a demand run as price cuts through those weak prices up there. Okay, so how about equilibrium? And I talked a little about these factors in my previous video, but I want to go a little bit more in depth before we do the main part of this video. This is when the bids and the offers are just about equal in number, where supply is equal to demand. So there are two kinds of equilibrium that I've noticed. There's active and inactive. So active equilibrium is where you have very many bids and many offers, and inactive is just not many bids and not many offers. These are two examples of just inactive equilibrium. We just don't have many bids and offers relative to each other. Neither is dominant here, and really neither is dominant here, and they're very low in number. That doesn't really tell us too much, to be honest. I would just say that whatever the trend has been doing will likely continue with an inactive equilibrium. So if price is going up, and then you see just bids and offers just about the same, price will likely just continue going up because there's high buying pressure. However, in active equilibrium, where there's many bids and many offers, tells a completely different story. Not one where it's going to be trend continuation or trend reversal, but rather which side is going to lose, really the battle between the large offer wall and the large bid wall. The dynamics behind these bid walls and offer walls when they meet up to each other and price just kind of goes sideways for a bit because there are many bids and many offers, there's going to be a large moving of many offers towards the bottom of the order book because there's so many offers trying to get filled. There's going to be a large moving of many bids towards the top of the order book. That's going to cause that, that battle, that standoff. What also that does is when one side loses out, and like let's say that the bid wall stays the same, but the offer wall goes down to 0.5, and then finally someone market buys, gets rid of that 0.5, and then price goes up. Price will likely go up very quickly because there's probably not too many offers up here. Anyone who wanted to limit sell has probably already done so, and price is probably just going to cut through there. On the market buying side, if 16 Bitcoin have just been market bought, that buying pressure is still probably quite high. And when traders see that price going up, quicker and quicker, they're probably going to market buy as well. So combine a weak order book with heavy market buying, and you're going to see when one of these sides loses out, price will likely go up very quickly. Flip side for, let's say that the bid wall gets destroyed or cancels. When price goes down, let's say this goes down like 2 Bitcoin get market sold to the bid, and price would likely just go down very quickly. This is the same kind of dynamic with a period of low volatility followed by a period of very high volatility. This is one of the reasons as well. When you see that, with these kinds of structures, price probably won't move much. And then when it does, it'll probably move very quickly in that direction. Okay, so what we also want to look at is the market buying and market selling relative to these bids and offers. So strong buying pressure is going to have 3 factors. It's going to have energetic market buying, heavy market buying, and very weak market selling. So I'm going to explain these 3 factors. But first of all, I do want to say that in many of my videos, I say, hey, a lot of market buying you want to sell. A lot of market selling you want to buy. That is absolutely still true. That's after many traders market buy or after many traders market sell. But what we're talking about in this video is not so much after, but the during. During the demand run or during the supply run or the beginning of that demand run, the beginning of that supply run, where many traders are market buying, you don't exactly want to market sell. The time to market sell is when the buyers lose interest or the buyers have already all bought. The price is overbought, that's when we sell. But we don't want to sell when price is just going straight up. That would be probably not a great idea. So energetic market buying is just going to be many market orders to buy, regardless of their size. Heavy market buying is going to be large orders to market buy, so like maybe 15 or 20 in one particular order to market buy. That's probably going to press price up in the short term very quickly upward. And just not much market selling so that the bids remain strong and continue to press price upward. Same thing with selling pressure. Energetic market selling, so there's a lot of market sell orders when you read the order history. Heavy market selling, so a lot of large market sell orders that are just clamping price down, and not many traders are market buying. Price will likely just continue going down in a supply run. This would be a demand run. How about equilibrium? So what if just there's an equal number of market buying and selling? So for every Bitcoin market bought, there's just about 1 market sold. And how about for weight as well? So I think I just said that here, but for the same amount of number of orders and the same amount of weight within those orders. What happens? Well, this equilibrium is going to be a bit different than the bid-offer equilibrium because in this one, whatever's stronger, if there's more bids than offers, price will likely just continue moving upward. Because if there's 1 Bitcoin sold for every 1 Bitcoin bought, and there just are no offers but many bids, then price is going to have a hard time going lower. It'll probably just continue going higher. And same effect for many offers, not many bids, and you get about an equal amount of market buying and selling. Price will likely just continue to go down. Okay, so now I want to talk about different kinds of dynamics with these combinations. So we've talked about bidding pressure, offering pressure, buying pressure, and selling pressure. But how do these combine? And this is the part of the video where we're getting into direct elements that can apply to one's trading. If you've made it so far in the 10 minutes without skipping around too much, which I know I totally would, to be honest. Okay, so strong bidding pressure plus weak market buying. So this is probably going to cause a weak demand run. So this is going to be, imagine that there are many limit buy orders, strong bidding pressure, just not many, and also not many limit orders to sell. So low offering pressure. But there's weak market buying. That represents a low amount of interest and a low amount of aggression to press price upward. So price will likely just slowly go upward as it's cutting through only a few offers. Reverse effect for strong offering pressure and weak market selling, price will likely just weakly go down before something else changes in the market. How about strong bidding pressure but energetic market buying? So a lot of market buying and heavy market buying. This is going to cause a strong demand run. So this is just when there aren't many offers, many bids, and lots of market buying. So price is probably just going to be moving very quickly in the short term in a demand run. That's quite powerful. Here, how about strong offering pressure, energetic selling? So this is when we have many offers that are pressing price down and not allowing it to move up, and a lot of market selling. So this is just going to cause price to go down very quickly. How can we use this in our actual trading? Well, when we look here with the strong demand run, with the strong bidding pressure and energetic buying, you probably don't want to buy here. But what you could do is wait for this demand run to end and do one of two things. You could wait for the demand run to end and try to sell at the end of the demand run, which probably wouldn't be too hard. If there's heavy energetic buying, you'll probably be able to fill your limit sell order. This isn't exactly recommended with a very strong demand run because that will probably just continue going up. But one thing you can do is wait for the demand run to turn into a supply run. So imagine you see very strong bids and energetic market buying, everyone's market buying. We don't exactly want to market buy, even when we know the price is going to go up. But what we can do is wait for price to weakly go down in a supply run, or the bids kind of ease off a bit, or maybe the bids go lower in the order book. We can put our bid above those bids in the order book that eased off a bit so that our order gets filled. So, with every single trend, you're going to see price goes up and then down and then up and then down, but sometimes it goes up more than it goes down. This is going to be one of those cases where it goes up a lot on a very strong demand run, but it's going to have to eventually go weakly down. And we can execute our order on that weak move down after we see a strong demand run. Same thing if we want to short or just to sell our coin. If you see a very strong supply run, you could buy. It wouldn't be that hard because you could just get your limit buy order filled very easily. But what you could also do is wait for that sell-off to just go down very quickly. Let's say price goes down like 1% on a very strong supply run. Just everyone seems to be market selling. Wait for that weak move upward as supply has overreached demand, and we're trying to get in. What's happening is demand is eventually meeting back to supply as price weekly goes upward. I.e., in simple terms, everyone who wanted to sell in the short term has already sold, and there's a bit of an ease off in price as price goes back upward before continuing to go down. And that's where you can sell. So how about strong bidding pressure but energetic market selling? So this is where it gets a little different and interesting. So imagine many limit buy orders, many bids. It's a very heavy weighted order book and really not many offers, but energetic market selling, just tons of market selling. What's probably going to occur, and I'm going to say this with an asterisk next to it, is a weak supply run followed by a strong demand run. Price will likely go slowly down and then very strongly up. The reason that occurs is there's going to come a point where that energetic market selling stops, and if the bidding pressure remains, then you're going to get to a point where many traders who wanted to sell have already sold, and you're just left with many traders who want to buy. And those bids are just going to continue to press price up, and price will probably go up in a strong demand run. Also, for those curious about retail institution, this could be a spot where many retail traders are energetically market selling, but institutions are holding price up with strong bidding pressure. The asterisk on this comes from, if you see strong bidding pressure and energetic market selling, you'll probably get a point where there's a weak supply run, where price goes down a bit, followed by a strong demand run. However, if price is actually able to break through the bids, So if price actually is able to sell through all of the bids and you then get an offer wall and energetic market selling, price is probably just going to continue to go down. So you just want to see if those bid walls remain bid walls or if they cancel or get sold over. So same thing with just the opposite kind of market. So imagine strong offering pressure and energetic market buying. So this is going to be really many limit sell orders, many offer orders as they're called, and energetic market buying. So a lot of traders are trying to buy, 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 buy. You get that weak demand run as price slowly goes up because there are many offers causing price to not go up high. Weak demand run followed by that strong supply run. And what's this going to look like on an actual candlestick volume chart? Well, what you're going to see with this kind of formation, with this weak demand run followed by the strong supply run, is probably at the end of an uptrend when you get that small body, high volume candlestick. So price barely goes up, but it's a very high volume. It barely goes up because there's strong offering pressure, and it's very high volume because there's energetic market buying. And that's a pretty bad sign for an uptrend. And same thing here with, this would be price slowly going down in a small red candlestick and volume being very high in a downtrend. And this is probably going to be followed by a swift bullish move to the upside. Okay, so how about weak bidding pressure and energetic market buying? So what I mean here is imagine that there's a lot of market buying and prices going up, but there's really not much bidding pressure that moves upward with price. Traders are buying, but the limit orders themselves, the demand, isn't really rising. Well, this is going to be a present demand run as those market buyers continue to press price up. They press price up until demand eventually meets supply, where all the buyers who wanted to buy have already bought. And when you get that, you're going to get a demand run followed by a likely weak supply run. Reason I say that is if there's not many bids moving upward with price, they're probably going to remain lower in the order book. And price will likely be followed by a weak supply run, meaning price slowly goes down until it reaches those bid walls that form. So you can get a strong demand run or relative moderate demand run, and you can get a weak supply run that slowly goes down like this. And what happens after that will probably be another demand run. But if you see the bids just vanish and an offer will pop up, that could actually be a bearish reversal, price goes down. But what I say here is weak bidding pressure and energetic market buying, you're probably going to get a supply run, as price doesn't have to, but price will probably sell down to lower bid walls. Same thing here, weak offering pressure, but energetic market selling. Oh no, slightly different, but similar elements. So when you get very, very weak offering pressure, so price just is going down with energetic market selling. Everyone's selling, but really not many offers to match it. Then price has probably reached a point where supply has met demand, and you're going to get a supply run followed by a weak demand run. So you have that present supply run with that energetic market selling that's slicing through bids, also known as limit buy orders, as I've said probably a million times. But that weak offering pressure isn't going to be able to hold price when the market buying begins, and price will likely have a weak demand run back upward. Where you can limit sell if you want, you can sell on that weak demand run. You could even be crazy and try to buy on a supply run when you see that there's not a large amount of offering pressure. That would be an interesting kind of scalping maneuver you could make that could be high risk but high reward if you would like to. How about equilibriums? So what I mean by this is equilibrium order book pressure and energetic market selling. So imagine the bids are equal to the offers, and they're just about this could be active or inactive equilibrium. Likely more active equilibrium though. Inactive, anything can happen, just not many orders. But you get energetic market selling. You're likely to get a supply run because if, let's say there are 50 Bitcoin limit bought at the very top of the order book, 50 Bitcoin to be limit sold at the very bottom of the order book, and you're just seeing heavy market selling where you see an order of 14 Bitcoin market sold, then 2, 3, 0.1, 0.2, just everyone's market selling, price will likely go down as supply run. Same thing here. Imagine that you have equal bids to equal offers. So equilibrium order book pressure, but energetic market buying. As many traders are market buying, you're probably going to get a demand run as that offer wall erodes and price goes upward in that demand run. All right, so I know this video was a lot of different kind of terminology, a lot of visualization that you might have to do, but I think that these kinds of dynamics are really important and overlooked a lot by many traders who just look at the bigger picture and might not understand or might not look at the smaller picture, like these demand and supply runs that occur within the order book here, and the amount of power and weight that these hold when you see these. But I hope that through these kinds of schematics of looking at different kinds of combinations of strong offering pressure, strong bidding pressure, weak bidding pressure, strong buying pressure, and weak selling pressure, and all these kinds of things, that you can get a better understanding of why price moves occur and why price sometimes reverses, why price sometimes makes continuations and continues moving that direction. Yeah, so the price prediction, as I had shown at the beginning of this video, is on for this week, and best of luck with that, and happy trading.